Hi, coming in for this special broadcast when the rupee has not only hit new record lows, we've been seeing that day by day, but has gone past the 91 per dollar mark. Now, the quick deterioration of the rupee since 9 a.m. this morning is truly astonishing. And this has been going on for the last 5 sessions, over a percentage point in the last 5 sessions. What we're going to try to do over the next few minutes is try to explain exactly what's happening and why this pain point. Alex, what is also noteworthy over here, as we bring you the special broadcast from our newsroom, is how the RBI is not really intervening.
Yes.
I won't call it entire lack of intervention, but we're not seeing it on the screen right now.
Yes, I think there's been a very considered decision by the Reserve Bank of India to use its reserves strategically in a situation where there is so much swirling uncertainty on the external front with a lack of clarity on tariffs and on a trade deal. The RBI is keeping its war chest very firmly in its control. It has reserves of over $600 billion. So therefore, it's utilizing this very carefully. What is important to note is that the RBI has very clearly stated that it does not want to control a particular level for the rupee. Its stated objective is to prepare to deal with extreme volatility. And of course, the definition of that, Tamanna, has actually shifted recently, especially in a scenario where for the year so far, in 2025, you have the rupee that has fallen 6.3%. And that the tolerance for the volatility seems to have eased a bit.
Okay, so if I were to explain very, very simply why the rupee is in free fall right now, one of the biggest reasons is that the trade deal has still not happened. India's exports are getting hit. As a result of this, the currency is continuously depreciating. And on the other hand, because of the depreciating rupee, FIIs are not coming in. Foreign investors are not coming in into the Indian equity markets. As a result of this, it's become a bit of a vicious cycle, right? The more FII outflows, the weaker the rupee gets. And this has an impact on the markets as right now. Two things are happening simultaneously. And I'm just going to bring in Sumit Sarkar from our research team for more on this. Sumit, so on the one hand, you have the rupee in free fall. Markets right now are doing very badly as well. And if you can pull up what's happening in the markets, you'll see that clearly. The impact on stocks is very, very real, isn't it?
Well, yes, the impact on stocks will be bigger given the fact that most of our oil is the biggest import coming into the country, and that also leads to higher costs for multiple companies. Firstly, on the negative side, it will definitely impact negatively when it comes to oil marketing companies and city gas distribution companies, because for them, oil is the key raw material and they buy that in US dollars, and the selling price happens at Indian rupee. So because of this, their overall cost gets impacted. Now, when it comes to city gas distribution companies, for them, they purchase gas, and that also happens in US dollar, and their cost of gas also increases. And as per analysts, around 0.2 to 5% is the EPS impact that comes in for city gas distribution companies. Apart from that, aviation is one sector that gets impacted the most, because nearly 60 to 65% of the total cost is dollar denominated, and this will definitely lead to higher cost for all the airlines in India. On the neutral side, pharma and chemical companies, the impact is largely neutral, because though they export nearly 50% of their products, nearly 50% of their imports are all raw material is also dependent on imports. So largely the impact is neutral when it comes to pharma and chemical companies.
Okay, just stay on with me, Sumit. We're getting a view from Jayesh. Jayesh Mehta of DSP Finance with us on the phone line. Jayesh, I hope you can hear me. And you know, we've had so many variations of this conversation over the last few days, because the rupee is going only in one direction. So a couple of things that I want to know from you. But the first thing, how low? Is there a bottom now that you see at 91? We had a conversation at 9 in the morning, and the expert we spoke to said that 90 is turning out into a base. That's clearly changed in the last few minutes, hasn't it?
No, absolutely. So I think there is 91 is just a number, right? I think we have to address the real problem. While we may keep on putting all the hope rates, saying, oh, because of tariff, it is because of, once the tariff is done, what's going to happen once the tariff is done? Nothing's going to change, right? As long as the real problem, as long as you have the FPI selling, right? And you have to find out what is the real reason. And if that FPI selling continues, then it's the bottomless pit, right? How much can RBI intervene? Because, last year they did intervene like a wall, and you wasted and you actually gave easy exit to the FPIs, right? Rather, they of course they intervene. They try to extract the control the volatility. So they come more like speed breaker rather than being a wall and defending a level. That's fine, because if you can't afford to be a wall and defend the level at this juncture, because that will go for as long as the equity outflows are there, which is a daily thing. You see, trade and all that is an annual number, right?
So Jayesh, sorry, just to ask you on that point, and you made a very important point that even if the RBI intervenes, you can be a wall to what extent? Till FPIs continue to sell, the rupee is going to continue to depreciate. But isn't it a bit of a vicious cycle? One of the reasons that FPIs are selling is the depreciating rupee. Their returns just get squashed because of the currency change.
I don't think we actually. I have been asking in the last 4 months to all the experts in equity market. Nobody has real reason why the FPIs are selling, right? When you have this net number of on an average it's around 2,000 crores net number, right? But you have that's the net number. If you look at gross numbers, it's like 15,000 crore purchase, 17,000 crore sell. Right? It's like 20,000 crore purchase, 22,000 crore sell, 9,000 crore purchase, 11,000 crore sell. So what these guys who are buying, right? So all the theories, people say, oh, India is expensive, then somebody's buying gross, right? Somebody's buying 15,000 crores, right? When people are saying that, because the rupee is depreciating, that's why they are selling, right? Then who is buying the gross number? Look at the gross number. There is something missing. I think maybe the regulators should know what is that is trying to push this so much of selling in FPI, and as long as that is there, firstly, we don't even know the reasons why they are selling.
Yes. So therefore, okay, so that's an important point that you're raising. By the way, in case you were wondering, dollar returns for the Nifty 50 at this point for year to date stands at just below 3%. Whereas in rupee terms, the Nifty 50 has returned about 9.5%. So that should put things into perspective about the attractiveness as things stand right now for the Indian equity markets for those standing outside. Garima is joining us from Elara Securities. Garima, thanks so much for taking the time. Help us understand this. Did you pencil in a 91 on the rupee against the dollar? And how low can you go from this stage in your opinion?
Hi, INR broke the 89.50 level. We thought the 91.50 and 92 is pretty probable, because large part of the current movement is being also led by the expectation that RBI has a hands-off approach in the intervention. So that has also been allowing wide trading bets in terms of range of the movement, and to also have been allowing certain INR speculative shorts also to play in the system. Secondly, there is a very high sentimental impact in regards to expectation of US-India trade deal, where the market expectations were very strongly anchored towards November end and mid-December. That has also not played out. And third, let's not forget that global the yields are on the upside, which is not really playing very favorably for EM asset classes in general, which is also playing up on the rupee. When you look at fundamentally India's macro balance in terms of trade balance, current account deficit, or where it has been over 2013 paper tantrum at rupee saw a very sharp swing versus where it is now, fundamentally there is absolutely nothing wrong with the currency for it to trade in this fashion. And hence I think a medium-term return or reversal towards 88.50, 89 towards the end of next calendar year looks very strong on cards.
Interesting. Okay. Jayesh Mehta, just your opinion on this, right? Because if the RBI has had, as so many commentators have pointed out, a hands-off approach, and they have a war chest of what, $687 billion, they've not been intervening as aggressively as they have in the past. Does that lead to a little bit of fearlessness from the perspective of the trader that has been pushing the rupee lower at this point, or is there more at play here?
I don't think, traders will follow the trend, right? So I don't think, in fact, traders really got hurt, right? Everybody thought like in November, December, we'll have the tariff situation sorted out, and therefore most of the traders were really seriously long INR short dollars, right? So they got caught on the wrong foot, right? I think the real problem is, and we have to really think, and maybe the regulators have to think seriously about it, how to address it. As long as you don't know what is the, FPI has like $800 billion plus, right? So how much they can sell, it's like, even if it is 10% going out, is going to be hurtful if RBI tries to define, right? So I think once we need to really know what is that, and if that selling continues, we'll have to face that, and maybe once it slows down and controls it, maybe after that RBI can intervene big way. But till that time, whatever you try to intervene, it's gonna go really waste unless you do a big wall thing. But then how? That will be a temporary stop. And let's also be very real that depreciation does not help the economy in long run. There's also an RBI report in past, while some people may say, it helps export and we would kind of offset the tariff situation and all that. No, in the next renewal of the contract, it all gets sorted out. So in long run, it's not even great for export. So we definitely need to look at it seriously.
So I have. That's an important point, Jayesh, and I'm going to request you to stay on with us because I want to come back for a follow-up. But on that point of what does it actually help exporters? Now, traditional common sense tells you that a depreciating rupee means exporters get a boost. Beyond a point, is it counterintuitive? SC Ralhan of the Federation of Indian Exporters and Importers with us on the show. Mr. Ralhan, thank you so much for speaking with us. Rupee is going only in one direction, has breached 91. What is the kind of impact that you're expecting for your stakeholders? Mr. Ralhan, can you hear me? Okay, we seem to have lost that line. We're going to get that export point of view. But Jayesh, the question that I had for you is, do you think it is time now, no matter how much it helps or not in the long term, that the RBI comes in and intervenes? Is this the point at which you expect the central bank to intervene, when you've crossed the 91 mark?
Not really, because, as I said, we don't know how much further selling is there, right? If you are trying to artificially stop that, it will encourage even people who are passive and not really thinking about selling, right? Like today, they may say, okay, fine, I get the opportunity to sell and get my dollars out at 91. If the selling continues, maybe it can go to 93, 92. I don't know, right? So we don't know. It's kind of the way the daily selling is happening. It's not real. There's something. And I think the whole equity market, everybody's trying to give a reason. Look at the gross number and explain that. Then once you know the problem, then you can try to address it. I don't think people even acknowledge the problem. What is the problem? So, and I think I genuinely believe we are a net importer country, right? It is not good for our country for depreciating rupees, right? So it's like, it may be short-term benefit for some exporters, but the next renewal is not going to get any benefit. In fact, for the economy, it's not great for so much of depreciation, especially when DXY is weakening. We are depreciating against every other currency. That's not a good thing.
Yeah, and it's every other currency, not just the dollar. And I'm going to get Garima Kapoor's view on it as well. But, I just want to tell our viewers that while we're showing you the rupee on the screen, look at what's happening to the markets. And you just zoom in over here. Of course, all those rates on your screen as well. But you see this on NDTV Money. And you have over 150-point fall on the Nifty. The Nifty IT, nearly 1% down. You have the Bank Nifty, nearly 0.75% down in the red right now. So this is a parallel pain going on, in which you would expect really that with the rupee in free fall, you're not going to see equities gain at any massive pace. Garima, I want to come to you on the point that Jayesh was making, and it was an interesting observation that there is, one point which is always made, hey, lower rupee, good for exporters. Indian goods get that impetus. It's sort of a mitigation against the trade deal, etc. But with this fast and furious fall, do you think that net this is harmful?
On a short-term basis, if you look at the long-term data for India and see what really drives India's exports, it is always the global growth strength that has driven India's exports more strongly than the movement in the currency. But on near short-term basis, probably two things are happening. Is that the nervousness is getting compounded with FPI outflows, because in China, Q4 till date, we have seen double the flows, FPI flows, than what they saw entirely in the last quarter. So there is a concentration risk that's playing out for FPI, which probably are missing the non-AI trade globally, where India probably does not have any pure play AI stock or AI beneficiary as such, number one. And number two, because inflation is low and the near-term risks of inflation really spiraling out of control are also limited, probably it allows much more headroom for RBI to continue to allow rupee to depreciate and not fear about immediate impact in terms of inflation. But yes, in long-term basis, historically the data has shown that the exports in India in terms of growth tend to respond more favorably for global growth rather than movement in the currency. Also in the medium term, as Jayesh mentioned, there's one more risk that we must watch out for. As India is becoming manufacturing ecosystem, and we are trying to move away from assembly to value addition. The first leg of this journey always involves import heavy situation. So you will actually see major import of components making through in India until finally you start to create a reasonable value addition. So from that point of view, pricing pressures could also be felt in those new age sectors like electronics, where import component is now very high. And second, one risk to watch out for is going to be certain unhedged exposures of certain corporates which have borrowed in the overseas market. Because remember, 2024 data told us the rupee behaved in a very tight leash. At least what RBI was guiding it into a very stable currency. That risk is also to watch out for.
Yeah. Important points that you've raised. Just a quick follow-up on that. In the last monetary policy review, the RBI governor very firmly stated that the CAD, or the current account deficit, is not a concern. And the question that I have for you is that you have the oil prices that have been more or less benign at below $65 to the barrel. But the question is on gold and oil. Does that prove to be a problem as early as FY26, or is that not something that you're worrying about?
No, I'm really not worrying about oil in terms of prices. The outlook remains benign, both for gas and oil. In terms of gold, we are seeing a spike, and globally gold is not being just driven by retail demand, but also in terms of it's working as a hedge. It's also working as a debasement trade, right, where people do not have any further, trust in the currency or fiat currency, is looking for gold as a hedge. But generally, outside gold, I would say the current account remains extremely benign. In fact, when you add your services exports and remittances, which actually benefit out of a weakening rupee, I would say our current account outlook is not going to be a deficit of more than even 1% this year and next year. So as I mentioned, fundamentally things remain extremely solid in terms of where we are in external sector. This is largely operation-led, short-term sentiment-led, and of course a lack of pure play AI that India probably misses vis-a-vis other EMs.
A lack of pure play AI. Okay, now back at 90.99, not that it's too much of a relief. Garima, Jayesh, thank you so much for joining in. I believe we have SC Ralhan back with us. Mr. Ralhan, can you hear me now?
Yeah, I can hear you. I can hear you.
Okay, so we wanted your initial comment. Is this, yes sir, is this, we wanted your initial comment. Is this, I mean, the idea is that lower rupee or weaker rupee is good for exporters. Will this end up hurting you? And what is the kind of hedging activity now importers and exporters need to undertake when you have such volatility in the currency?
Yes, I agree. It's a very, very volatile situation. You never know when it will come down. So hedging is again not a good idea. But see, the 91 price per dollar is not that profitable for the exporters, for all the exporters. The big exporters, yes, they may be benefited because most of the exporters, they also import also. So the benefit they receive for exporting is they are compensated by the import also. So it is not that beneficial, but anyway, it is good for the exporters.
Yeah, I mean, but like you said, most of the exporters are also importers. All right, thank you so much, Mr. Ralhan, for joining in with that quick perspective. So as we're wrapping up this special broadcast, right, from the NDTV Profit newsroom, and I have, of course, Alex and Somit to see what the impact is. And Somit, I just want to come to you on the point that this morning we saw a new low, as we have for the last several mornings, but the precipitation which we've seen in the last bit is pointing out to more trouble, and this is something that's going to bother markets.
Yes, it will bother market, and technically at this point of time, I believe that none of the foreign brokerages also know why there is this weakness coming into the rupee, because when rupee was at 90, I believe reading a couple of notes from foreign broking firms which clearly said that the worst when it comes to the Indian rupee is largely behind, and since then we have come down to now 91. So there is no clue, but what Morgan Stanley had actually stated in one of the earlier reports was that INR weakness has been driven by wider trade deficit, weak foreign portfolio flows. That is something that we are seeing continuous outflow coming in even in the equity market, and the US trade deal uncertainty and investor perception of RBI's forex policy, given the fact that RBI has not stepped in right now, given, despite the fact that rupee has come down to 91. That is also one of the reasons what is leading to this downfall in the rupee. Is what
so I'm not one for conspiracy theories, but this is the conversation we've been having since morning. One of the commentary this morning, Alex, if you recall, was that the RBI is not acting right now because they're waiting for something to happen on the trade deal. In the middle of negotiation, if the Indian currency gets hammered like this, is it an attempt in a way to even push us towards the trade deal? Like I said, there's no conspiracy theories here, but if you look at that overall picture, it would add more pressure to negotiators, wouldn't it?
It to a certain extent it would, but having said that, I think it's very clear that people understand the fundamentals are not affected at this moment. Even the people that we've spoken to today, they might question why are foreign institutions selling as much as they are. But then even Garima spoke about it. We've had earlier commentators speaking about it. The fair value for the rupee around 89 is okay. And so you could see a very dramatic shift and a move the other way. You could have people caught on the wrong foot in the speed at which the rupee can gain ground against the dollar once this major overhang goes away.
Yeah, I mean, this is a natural. Back at 91. Rupee at 91 right now makes no sense, but here's where we're at. The things that we need to watch out for is there intervention from the central bank to come in and rescue the rupee. To what extent will it carry on?